You know, sometimes I look at the chart and realize this chart actually tell our story as traders. Every rise, every fall, every pause is literally the same thing we go through in our trading journey. In this video, I'm going to use the three phases of the market structure to explain the three stages every trader goes through. So make sure you watch the video to the end, because by the end of this video, you're not going to see the chart the same way again. And if you're new to my channel, please consider subscribing and like the video. Let's dive in. We are going to start with the first stage, which is a downtrend. The downtrend represents the losing stage of a trader. This is where every beginner trader begins, and the curve of a beginner trader goes like this. Let's say the trader funded his or her account and start making profits. The equity curve goes like this, pointing to the upside. This is where a trader makes tons of profits and feels like this trading stuff is actually very easy, and start anticipating how much he or she is going to make in the next months, years to come. Eventually, the losing streak starts playing out. The trader starts losing more, and the losing streak goes like this, pointing to the downside, wiping out all the profit this trader has made already, giving the trader this equity curve of a downtrend, which represents a lower low. Let's say the trader did not blow his or her account and still have something to trade with. This is when the trader starts making profit again. The equity curve starts pointing to the upside, pushing up like this, pushing to the upside, and all of a sudden this trader starts losing. The equity curve drops all the way down, just like lower high and a lower low. When a trader is making profit, it represents the lower high, and when a trader is making losses, it represents the lower low. The equity curve goes deeper and deeper to the downside. The trader makes profit, but it's giving it all back to the market. The equity curve keeps dumping to the downside. Say the trader starts noticing that something is wrong somewhere. Maybe I don't have a proper knowledge about the market. This person starts looking for mentorship, and he or she is able to gain enough knowledge about the market. Now, this is when the trader will pass the stage and go to the next stage, which is called the consolidation stage. I call this consolidation stage confusion phase, because this is where a trader has been able to understand what he or she is doing on the chart. This person has been able to analyze the charts and pick trades. But when this trader makes profit, is giving it all back to the market, and the equity curve goes like this. It goes sideways, just like a consolidation, just like this. When a trader makes profit, it goes up, maybe stops around here, and when a trader is losing, it comes back down. So the equity curve keeps going up and down like this. This is like a confusion phase, where you're like, this is when a trader is stuck. This is where you feel like, I know what I'm doing on the chart, so what exactly is happening? Why can't I just make profit and withdraw? Why is it that today I'm making profit, the next day I'm giving it all back to the market, then the following day I'm coming back to just clear my losses, and I can't even make withdrawal? I know what I'm doing on the chart. Then what is happening? This is like a confusion phase, and this is where most traders give up. And you can even see it on the charts, where we have like a consolidation. A consolidation is not breaking out to the downside, neither is it breaking out to the upside. This may be as the result of the trader's psychology. It's no more about the strategy. Now, this is when a trader starts looking inward. First, it was as a result of a strategy, but now I have a strategy I'm working with. Something is still wrong somewhere. This is when a trader starts looking inward. This bets what is called self-awareness. This self-awareness is what is going to help the trader to leave this stage. Maybe it's as a result of impatience in the market, or taking profits too early, or the psychology is actually messed up. It may be as a result of one thing. Let's say the trader has been able to figure out this thing that has been keeping him or her stuck at this confusion stage, which is also like a consolidation, and start applying something that is going to take him or her out of this confusion phase. And eventually the trader breaks out of this zone to the upside, and this represents the beginning of an uptrend. An uptrend is like the third stage of every trader. This is a profitable stage. Let's look at the equity curve of a profitable trader. An equity curve of a profitable trader goes like this. where we see a series of higher high and higher low. Let's say the trader is making profit and the equity curve goes up like this, and eventually the trader starts making losses, which is something you cannot completely eliminate from your trading, right? But now the equity curve goes like this, maybe stopped somewhere here, and the winning streak continues pushing to the upside. Now the trader has been able to recover all his or her losses, and the curve is pointing to the upside like this. After some time, the trader start making losses, right? The trader start making losses, and the equity curve goes like this. This represents what? This represents a retracement. Okay, this curve represents a retracement. The retracement is as a result of a losing streak a profitable trader is facing on the chart. The retracement phase, which is also a losing streak, will determine how the trader apply proper risk management, right? Because with proper risk management, the trader losing streaks will represent maybe a shallow retracement, something like this, okay, before the next expansion to the upside. But if the trader does not apply proper risk management as a profitable trader, the equity curve is going to go deeper like this, right? It's going to go deeper like this, which represents the losing streaks. Eventually the profitable traders start making profit, the equity curve pushes up like this, and it keeps going like this. I used to think that for someone to be a profitable trader, the equity curve needs to go like this, like it needs to go up and up without any retracement, like losses. When I started looking at the chart, I realized that an uptrend does not have this kind of curve pushing to the upside without any retracement. So the retracement we are seeing on the chart represents when a profitable trader is probably in a losing streak. Okay, this represents when a profitable trader is in a losing streak, and the curve goes down like this, right? And eventually the trader continues making profit. The curve pushes up like this. Okay, so you may actually be a profitable trader, but you don't know, because we traders are always expecting to make profit all the time on the chart. We don't look at the downside of it, which is like a retracement, because the chart itself does not give us a clear push to the upside without any retracement. So as a profitable trader, we should also consider how the uptrend moves. Okay, it doesn't move all the way up without any retracement. So when you are in a losing streak, just understand that this is like a retracement the market is making in an uptrend. Okay, I just hope this video was helpful. I just hope you learned one or two from this video. If you like this video, please consider giving it a like and subscribe to the channel. Thank you so much for watching. See you in my next video.